Here's a question that should make you uncomfortable. What if the biggest threat to Bitcoin isn't regulation or energy consumption or even market manipulation, but something most people think is decades away?
Quantum computing.
Right. And here's the twist. It's not just a distant theoretical problem anymore. Institutional investors are already pricing it in. Jefferies just pulled Bitcoin from their flagship portfolio and moved to gold instead, explicitly citing quantum risk.
That's actually a big deal. This isn't some random Twitter personality. This is Christopher Wood, a strategist managing serious institutional capital, saying quantum computing is an existential threat that's going to be a yoke around Bitcoin's neck until it gets fixed.
So today, we're asking, is the quantum threat real? Is it actually affecting Bitcoin right now? And can Bitcoin even upgrade its way out of this problem given its decentralized structure?
Those are the right questions, and the answers might surprise you.
Let's start with what actually happened. Jefferies removed a 10% Bitcoin allocation from their flagship portfolio and moved to physical gold and mining stocks. That's not a small tweak.
No, it's a fundamental reassessment of risk, and it's happening while other institutions like Harvard are increasing their Bitcoin holdings by 240%. So we've got this divergence forming, where different players are making completely opposite calls based on the same underlying threat.
Which tells me nobody actually knows how to price this risk yet.
Exactly, because quantum computing sits in this weird space where it's both too far away to panic about and close enough that ignoring it feels irresponsible. The research from Chain Code Labs estimated that somewhere between 20 and 50% of all Bitcoin addresses could be vulnerable to quantum attacks.
Wait, half of all Bitcoin could be at risk?
Not quite. They're saying that percentage of addresses have exposed public keys, which makes them theoretically vulnerable if someone builds a powerful enough quantum computer. We're talking about roughly 6.26 million BTC worth between $650 and $750 billion.
Okay, so break down the actual threat. How would a quantum computer attack Bitcoin?
There are two main attack vectors. The first and most immediate threat is to ECDSA. That's the elliptic curve digital signature algorithm. Bitcoin uses this to generate public keys from private keys. Right now, that's a one-way function. It's computationally impossible to reverse.
But a quantum computer could reverse it?
A sufficiently powerful one, yes. Using something called Shor's algorithm, a quantum computer could potentially derive someone's private key from their public key. And if you can do that, you can steal their Bitcoin.
And the public key gets exposed when?
Here's where address hygiene matters. Your public key is only exposed when you send Bitcoin from an address. If you've never spent from an address, your public key isn't on the blockchain, only the address itself, which is a hash of the public key. That's much harder to attack.
So the people most at risk are those who reuse address?
Exactly. Legacy paid-to-public key addresses, certain multi-sig wallets, some taproot setups, these are the vulnerable ones. And this is why best practices have always said don't reuse addresses. People thought it was about privacy. Turns out it's also about quantum resistance.
What's the second attack vector?
SHA-256, which secures Bitcoin's proof-of-work system. In theory, quantum computers could use Grover's algorithm to mine blocks faster than classical computers. But that's actually less concerning because the advantage isn't as dramatic and the network could respond by adjusting difficulty.
So the real threat is someone building a quantum computer powerful enough to crack private keys and then sweeping up billions in Bitcoin before anyone can react.
That's the nightmare scenario, and the timeline keeps getting compressed. Google hit some major quantum milestones in 2025. The industry talks about something called CRQCs, cryptographically relevant quantum computers. Most estimates put that in the 2030s, but those estimates keep moving earlier.
There's actually a quantum doomsday clock tracking this, which is either hilarious or terrifying depending on your perspective.
A bit of both. It tracks qubit count and error rates over time. The trajectory is exponential, and if AI starts accelerating quantum development, which seems likely, that timeline could compress even faster.
Okay, so if this is such a known problem, why hasn't Bitcoin upgraded to quantum-resistant cryptography?
Here's where Bitcoin's greatest strength becomes its greatest weakness. Decentralization means there's no one who can just mandate an upgrade. No risk committee, no CEO, no central authority to say, we're switching to post-quantum crypto on this date.
It requires consensus.
Messy, slow, political consensus across thousands of nodes, miners, developers, and users. NIST published post-quantum cryptography standards in 2024, so the technical solutions exist, but implementing them on Bitcoin is like trying to rebuild a plane while it's flying, and getting every passenger to vote on which parts to replace.
Charles Hoskinson from Cardano warned that early adoption of quantum-resistant crypto could kill efficiency, right?
Yeah, post-quantum algorithms are computationally heavier. They require more space, more processing power. If you implement them too early, you could bloat the blockchain and slow everything down. But if you wait too long, you're gambling on the timeline.
So Bitcoin is stuck between acting too early and being inefficient, or acting too late and being vulnerable.
And that uncertainty is what's hitting institutional allocation decisions right now. It's not that quantum computers exist today that can break Bitcoin, it's that the upgrade path is unclear and the governance structure can't move quickly.
Let's talk about that institutional divergence. You've got Jefferies pulling out, Harvard doubling down, Morgan Stanley and Bank of America now recommending up to 4% allocations. What's driving these different calls?
Risk tolerance and time horizon. Jefferies probably thinking about clients who need stability and can't afford existential tail risks. Harvard's endowment operates on generational timescales and can stomach volatility for asymmetric upside.
And they're betting Bitcoin will solve this before it becomes catastrophic.
Or they're betting the threat is overblown. David Duong from Coinbase called this low probability, high impact. Most crypto people think we've got time, but the consequence of being wrong is total.
There's also this interesting point about how Bitcoin compares to traditional finance. Banks can mandate upgrades from the top down. If JP Morgan needs to switch to quantum-safe encryption, they just do it.
Exactly. Centralized systems have operational advantages when it comes to coordinated response. Bitcoin doesn't, which is ironic because the whole point of Bitcoin is to avoid centralized control. But that same property makes it harder to defend against certain threats.
So what does Bitcoin actually need to do? Is there a realistic upgrade path?
Yes, but it's going to be complex. You'd need to implement new quantum-resistant signature schemes, probably using something like hash-based or lattice-based cryptography. Then you'd need a migration period where people move their funds from vulnerable addresses to quantum-safe ones.
And what about the coins that never move? Satoshi's coins, lost coins, people who died without passing on their keys.
Those become a fascinating edge case. If those addresses are vulnerable and the owners can't move the funds, they're potentially up for grabs once quantum computers arrive. Some people have proposed a use it or lose it rule, where coins in vulnerable addresses eventually become unspendable, but that's wildly contentious.
Because it violates the immutability promise.
Right. Bitcoin's social contract says your coins are yours forever. Forcing people to move funds or lose them breaks that contract. But not doing it might mean billions in BTC become vulnerable to quantum theft.
This is where governance gets messy.
Very messy. And the longer Bitcoin waits, the more contentious it becomes. You want to upgrade before it's an emergency, but you need enough consensus to actually implement it. Those two things are in tension.
Is there any blockchain handling this better? Some newer chains are building in quantum resistance from the start. Algorand has talked about it. QAN platform is explicitly focused on it, but they don't have the Bitcoin network effect or security from proof of work. What about something like Internet Computer? I know they've been focused on cryptographic infrastructure.
ICP uses chain key cryptography, which is interesting because it allows the protocol to evolve its cryptographic schemes more flexibly than Bitcoin. The network can evolve cryptographic protocols through governance proposals without requiring every node to manually update.
How does that actually work?
Chain key crypto uses threshold signatures across subnet nodes. Because the protocol controls key management at the network level rather than relying on individual user keys like Bitcoin, you could theoretically rotate to quantum-resistant algorithms through subnet consensus.
So it's architecturally easier to upgrade.
In theory, yes. ICP's governance model, where the network nervous system can approve protocol changes, means you could implement quantum-resistant crypto faster than Bitcoin's decentralized consensus process. But that comes with trade-offs. You're trading some of Bitcoin's radical decentralization for upgrade agility.
And they'd still need to actually do it. Having the capability and executing are different things.
Absolutely. And to be fair, ICP hasn't faced the quantum scrutiny that Bitcoin has, because it's not trying to be digital gold. The threat profile is different, but the architectural flexibility is worth noting when you're comparing how different protocols might respond to quantum threats.
Does that flexibility matter if the ecosystem isn't big enough to weather a transition?
That's the other side. Bitcoin's size and stability means any upgrade has massive implications, but also massive stakeholder buy-in to get it right. Smaller networks can move faster but have less at stake. There's no free lunch here.
All right, let's zoom out. What should people actually do with this information?
If you hold Bitcoin, practice good address hygiene. Don't reuse addresses, move your coins periodically, use hardware wallets. When quantum-resistant addresses become available, migrate to them early.
And if you're an institution deciding on allocation?
You need to price in governance risk. Bitcoin's inability to coordinate rapid upgrades is now part of the risk profile, separate from quantum computers themselves. That might mean lower allocation, or it might mean accepting that risk for the other benefits Bitcoin provides.
What about timelines? Should we be watching for specific milestones?
Track quantum computing progress, qubit counts, error rates, algorithmic breakthroughs. Watch Bitcoin's developer community for BIPs related to post-quantum cryptography. And pay attention to how other institutions are reacting. If you start seeing sustained outflows from major holders, that's a signal the market is repricing this risk.
There's also DARPA's Quantum Blockchain Initiative, suggesting threats emerge in the 2030s. Is that a reliable timeline?
It's a reasonable estimate, but remember, exponential curves are deceptive. 5 years ago, people would have said 2040. Now it's 2030s. If AI accelerates quantum research, we could see another compression.
So the prudent thing is to assume it happens earlier than expected.
Especially when the downside of being wrong is existential. This is classic asymmetric risk. The cost of preparing too early is inefficiency. The cost of preparing too late is catastrophic.
One thing I keep thinking about, Bitcoin has survived so many supposed existential threats. The scaling wars, the China mining ban, regulatory crackdowns, energy FUD. It's still here.
It is, and that's part of why people have faith it'll survive this too. But quantum computing is different because it's not an economic or political threat. It's a cryptographic one. You can't fork your way out of broken math.
You have to actually solve it.
Right, and solving it requires coordination on a level Bitcoin hasn't really been tested at before. The block size wars were contentious, but they didn't threaten the fundamental security of existing coins. This does.
Which brings us back to Jefferies and that reallocation. They're not saying Bitcoin is going to zero. They're saying the risk is too uncertain to hold right now.
And they might be early, or they might be right. Gold doesn't have cryptographic assumptions that can be broken. It's been valuable for thousands of years and will be valuable after quantum computers exist.
Bitcoin's value proposition is different. It's digital, programmable, borderless, but it requires the cryptography to hold.
Which is why this matters so much. If Bitcoin solves this cleanly and demonstrates that it can upgrade its cryptographic foundations through decentralized consensus, that's actually a bullish long-term signal. It proves the anti-fragility.
And if it doesn't?
Then we find out whether Bitcoin's decentralization is a feature or a bug when it comes to existential threats.
So the quantum threat isn't just about quantum computers. It's about whether Bitcoin's governments can rise to meet an existential challenge.
Exactly. And we're watching that play out in real time through institutional allocation decisions, developer proposals, and market performance. Bitcoin's down 6.5% against gold this year. That's not just volatility, that's repricing.
Where do we go from here?
Bitcoin needs to have a serious conversation about quantum resistance, not in 5 years, now. The community needs to align on a technical path and a governance process, because waiting until quantum computers exist to start that conversation is too late.
And for everyone else watching this space?
Stay informed, track the tech, understand your exposure, and remember that uncertainty is not the same as impossibility. Just because we don't know exactly when quantum computers will threaten Bitcoin doesn't mean they won't.
The quantum clock is ticking. The question is whether Bitcoin can tell time.
And whether it can move fast enough when it does.
That's our show. Thanks for tuning in to Infinite State, where we cut through the noise to find the signal. We'll catch you next time.